IonQ, the innovative quantum computing stock, experienced a huge stock price crash following comments made by Nvidia CEO Jensen Huang. In this video, I'm going to review those comments, what it could mean for IonQ stock investors, and answer the question if the stock price crash is a buying opportunity for IonQ stock investors. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So looking at this price chart here for IonQ going back 3 months, you can see the significant increase in the share price starting in October of 2024. The share price was up over 400% before this most recent stock price crash has brought it down, but it's still up over 216% since October. So if you've owned IonQ stock for, more than 3, 4, 6, 8 months, then you're still having nice gains built into the investment. Still, the big decrease is not pleasant, and these quantum computing stocks, IonQ specifically, have experienced huge volatility, putting investors on a roller coaster ride. So this isn't for the faint of heart. These stocks are not for investors that are risk averse and cannot handle these large price swings. These price swings that have occurred in the most recent 3 months are likely to happen again at some point in the future, and maybe even continue during these next few weeks. The rise in volatility surrounding these quantum computing stocks started with the upside, right? When Alphabet announced its breakthrough in quantum computing, that created a lift for the industry overall, IonQ included. And now the comments yesterday from Nvidia CEO, who said that the quantum computing industry is not really going to mature until maybe 20 years from now. And the words he used was that the quantum computing industry was not going to be very useful to enterprises until maybe 20 years from now. He gave a range saying that 15 years may be too early to expect and 30 years would be too late. So 20 years, he said, would be just about right to expect useful quantum computers. And so that created a big sell-off in quantum computing stocks, IonQ included, which experienced the big drop-off you see here. I can show you a 5-day chart which magnifies the action in the most recent days following these comments. It's now down over 23%. It was down as much as 40% following the news. The drop was so fast that it created a gap here in the trading action, the price falling quickly following those comments. Now, you could argue that the prices shouldn't fall by that much based on comments made from another industry CEO that may or may not know as much about the quantum computing industry, because the CEO is sure, the artificial intelligence quantum computing is closely related, and Nvidia's GPUs are used in developing these newer technologies. But does the Nvidia CEO know about what's going on with IonQ, the inside, what's going on in the research and development, what things IonQ might have in the pipeline? Maybe, maybe not. But you can also argue that these quantum computing stocks shouldn't have increased by as much as they did following the announcements from Alphabet. So that's what I talk about with stocks in general, the stock market in general. It has a habit of overreacting on both the upside and the downside. It overreacts when certain types of news comes out and the price is expected to go up. Usually goes up by more than it should. And then when bad news comes out, it usually goes down by more than it should. These volatile moments create and feed on themselves. The buying creates more buying and the selling creates more selling. And so these stocks kind of overreact. And then after a few weeks, they settle down and reach their equilibrium price, the price where investors feel like it's fairly valued for the most part, not too high, not too low. And so the volatility eases up a bit. Looking at the company's business, it's very early stages. 37 million in trailing 12-month revenue for IonQ puts it among the leaders of all quantum computing stocks. The others don't have anywhere near the revenue that IonQ has. If you compare it with Rigetti, D-Wave, quantum computing, they don't have anywhere near the revenue of IonQ. So it's well ahead of the others, and it's growing relatively quickly and more consistently than the other quantum computing stocks, which are more lumpy in their revenue. They get a burst and then a slowdown and then a burst. Quantum IonQ is more consistent, but it's still generating huge losses on the bottom line. But the good news is that these losses are improving with revenue growth. Its operating margin was negative 558%. It's likely to be negative for a long time still, but at least investors can see progress. And that's what you like to see with innovative companies, with growth companies that are losing money on the bottom line. You want to see them make progress. And you certainly see that with IonQ. And it's a similar story with IonQ's cash flow from operations to sales. It's also improving at negative 248%, still hugely negative, but it's improving. And so you can see it as it grows, as it signs new contracts, incrementally getting closer and closer to being self-sustaining. And as it shrinks the losses on these financials, it gives them more time, right? If it's losing $1 million every month and it reduces that to 500,000 every month, that gives it more time to develop these innovative technologies, to find commercial applications for these technologies, to form partnerships with enterprises and institutions, to give it more connection, to give it more sustainability, to give it more sources of capital. And so you do see that coming from IonQ. And IonQ has one of the better balance sheets in the quantum computing industry. It has $302 million in cash. And so while it's still losing money on the bottom line, the robust cash and short-term investment balance gives it time to reach the next milestone. Sure, if it experiences another big stock price increase, it can opportunistically sell shares of stock to raise more money to give it even more time, but it doesn't need to right now. It's not in a desperate situation to need to raise capital. And the lower stock price following that huge decrease has brought it more in line with its valuation. It's now trading at a forward price to sales of 44, which is on the lower end of where this stock has traded for in the last 2 years. So a couple of weeks ago, this stock was trading at a forward price to sales of 120, which was at the higher end of where it was trading. So now you're getting it at roughly 1/3 the forward price to sales ratio you were able to get it at a couple of years ago. So does that mean you should buy this innovative quantum computing stock on the dip? I say not yet. I say it's still not ready to be purchased for long-term investment. This is still a very speculative investment, very volatile, high risk, high reward. And I'm not convinced that the reward justifies the high risk that you're taking right now with IonQ. So very innovative, very high upside, but still a little early for me to recommend as a buy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.